The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 24th, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. Hope everyone out there had a fantastic weekend. Welcome back. Let's go take a look at one of our empowering beliefs. I call this one, change your mind and change your life. You know, oftentimes we underestimate the giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. Think about it. You know, for those of us that don't achieve what we truly want, the main cause is that we never direct our focus. We never concentrate our true power. It's as if we dabble our way through life, never deciding to master anything in particular. And when it comes to trading and investing, dabbling just won't do. It's all about mastery, and that means immersion. And one of the things that we always have to keep in mind is that we must always learn to master time. Why? You see, once you master time, we understand that we typically overestimate what we can accomplish in a year, just as we underestimate what it is that we can achieve in a decade. And all you have to really do is just take a look back at your life. Look, if you're confused, you must recognize that all confusion really means that you're just about to learn something. Think of it like this. The seed gets planted into the ground, and on its way up, it hits the crust of the surface. How easy do you think it is for that little seedling to bust through? You see, most of those seedlings, they hit the crust, they get confused, and they never break through. Here's the key. Success comes from taking the initiative, from being persistent and making sure that you express the depth of your conviction with every action that's taken. We must always remember this, folks. Always remember this just before we are about to break through. And that we also must remember that the universe is going to test us. You see, the universe is going to test our conviction. It's going to test our persistence, and it's going to say to us, show me just how badly you really want the thing that you are begging for. So that means there's really just one question as we begin our day, and that is, what simple action could we take? What simple action could you and I take today to produce a new momentum towards some area of success in our life? This much I know to be true. The path to success, well, it's to take massive action, massive determined action. There is no abiding success without commitment. If you want to be successful, find someone to achieve the results you want and copy what they do, and you'll achieve the same results. The time, folks, it's now to master anything that you want in your life. Mastery, yes, it is a beautiful thing. Remember, life is like a mirror, and life will reflect back to you that which we think about. I say turn your mirrors into windows. What that means to me is look in the mirror, see the person you want to become, and the reason why I say you want to become is because each of us are always trying to improve, and then take the massive action and jump through that mirror. Yes, let's turn our mirrors into windows. Let's go check out the mirrors and the windows in these markets. Right now, we've got the Dow trading back $5. It's giving back all of its gains in the early morning session here. The S&P is off $5 as well. It's trading at 1860. Composite is the big loser to the downside. It's off 0.7%. It's off 33 points. Russell 2000 now down 0.7% as well. It's trading down $9 at 11.84. Apple on the move to the upside. It's up $6.50. New Skin Enterprises up $14. Geospace Technology, GEOS up 7%, up $4. Herbalife up 3. Endosight up $1.83. To the downside here, you've got Priceline. Priceline trading off $25, down 2%. Well, that's putting some pain inside of the NDX 100. Netflix is off $18. That is down quite a bit. It's off 4.5%. Google off $17 out here. It's off 1.5%. Intercept Pharmaceuticals, ICPT. You try saying that fast. That's off $13. Biogen, BIIB, off $7.50. Chipotle is on fire this morning after breaking out. I think Chipotle's got more room to run with an A to B equals C to the upside, but not this morning here. It's down $9, off 1.5%. Alexion Pharmaceuticals off $8.50. LinkedIn down $8. Tesla off $7. Amazon down 6.5. Our call number is 877-927-6648. Let's check in on the Euro Japanese yen. Didn't get a chance to do that during the first hour. The first chart we're going to look at on our screen here is the 120-minute chart. You can see a sideways consolidation box that it has been traveling in. Really since the trading session of about 1 o'clock in the afternoon on March the 13th. So it's been consolidating. Today's the 24th for about a 11 calendar day time period out here. If, in fact, you were to see the lows get busted out of here on the 120-minute chart, you're looking at a price point at the 5 a.m. session on March 21st, and that's at 140.42. A close below that, that would spell trouble. Double trouble, toil and bubble, something like that from Macbeth out there. Because once you break a consolidation, then what happens is you would do a measured move equal to or greater than the consolidation out there. That's what we'd be looking at on the 120-minute chart. What that really means is if we go back and we take a look at the daily chart, it means that 0.786 Gartley sell pattern would still be back in place. So that is a strong level of support. The bottom of the consolidation box inside the 120-minute chart out there. You don't really see it as clearly as you take a look at the daily chart, but basically that low is taking you all the way back to the breakout session inside the Euro Japanese yen for March 6th, and that is at 140.41 out there. Now, if we take a look at the retracement level here of this Gartley sell pattern, what we'll see is that the first level has been hit, the 0.382 area, 140.89. It traded just slightly below that level. Let me just make this a little bit easier for you. But it really was just traveling back from a price standpoint into the breakout. If it can break through that level, remember we're talking about a measured move. Well, first thing, from a retracement standpoint, your expectation would be in the 139-ish range out there. That's your 0.618 retracement. Nothing wrong with something moving back there. That might, in fact, set up a buy point. There is no Gartley that I see. It looks like the Gartley on this case here would form right around the 0.786. I'll show you what that would actually look like here. That's if it can break through that area. This would more likely be the Gartley pattern that I would be looking at. Whoops, I should change that to a different color, like a yellow color. But we're going to take this one day at a time. I'm actually going to go ahead and get rid of this pattern out here, but that's what you would be looking at. So I would say if in fact the lows are taken out inside the euro yen, they have not been yet. If those breakout lows are taken out, you'll likely see price move back not just to the 139 level, but the 137 area, and that will go ahead and put a lot of pressure on pricing inside of our market. So that's what's going on inside of that currency pair. Let's go see what's going on inside of the indexes, and let's do this here. Let's take a look at it on a number of different time frames. Let's begin here by taking a look at the S&P 500. Let's look at the S&P 500 on the monthly chart. So if you're just listening to the radio or your mobile device at TFNN.mobi, thanks so much for doing that. I'll try to describe what it is that we're looking at, of course, on Tiger TV, inside the Tiger's Den. What you're looking at is a monthly chart for the S&P 500. This is using the Rhodes momentum indicators out here. You can see that on the monthly chart thus far right now, if you were to close right here, you'd form a doji candle. That's at 1859 out here. What we can say on the monthly basis is the only time that we've seen the bears really show up here was in the month of January. They formed that bear sash candle. However, they were overtaken. We saw a close above that level in the month of February. So on the monthly chart out here, as we speak right now, no damage has shown up inside of the S&P 500. We obviously have more trading sessions left, so can't say that it's going to turn into a doji candle. When we take a look at this month's pricing here, so today is March 24th. What you can see inside the S&P 500, we've gone nowhere in 24 calendar days out here. That's what a doji is. It's where you open and close at the same price point. So we've seen a lot of moving up and down. You're seeing that take place today. Plus, try to put this thing in perspective from a monthly standpoint. The market is basically done zilch, done nada, done nothing out there, and that's what the monthly chart is showing us. Makes the picture kind of clear, doesn't it? Let's go take a look at what the weekly chart is showing us. Let's go see what happened last week inside of the S&P 500. Now, the S&P 500, the week ended March 14th. You did have a bear sash candle, but if you take a look at the close last week, from my standpoint, it pretty much erased that bear sash candle. Now, we do have price relative strength divergence out here. That is always a potential bearish pattern. But in the case here of the week of March 14th, we did not see any follow through last week to the downside. It always makes it suspect. It says that on a weekly basis here, unless you see a close below 1836.02, you just have some normal jostling going around out there. So you're trading right now at 1859. 1835-ish is going to be an important area for the S&P 500 to hold should it get down there and test it this week. That's what's going on a weekly chart. Let's look at today's chart. Let's see what we have showing up inside of the S&P 500 today. Still just in a really a consolidation move. We've been consolidating up these highs for quite some time. In fact, inside the S&P 500, you can easily make the case that it's been consolidating since February 24th. So for a solid month, we've seen a sideways consolidation, the low of that consolidation box being the low of March 14th. That price level, 1839.57. So that's another 20 points down downtown inside of the S&P 500. Well, you take that out, and that starts changing things on the daily basis. That'll probably start changing things on the weekly basis as well out there. Let's go take a look at the NASDAQ Composite, which has been a weak link out here. Let's do the same thing. Let's start off by taking a look at a monthly chart. We'll work our way back. Quick sip of the water out here. So we can see here, let me pull this down just a bit. At this stage here, no bearish reversal signal inside of the NASDAQ Composite. In fact, this is the monthly chart here. Last time you saw a bearish reversal signal was all the way back here. This was in October of 2012. Last time we saw a bearish candle was a bearish engulfing that had formed out there. Thus far this week, you can see really more of a what's called a bear harami, which is nothing more than a pause button inside of the market. So although it's the weakest out here from a monthly perspective, you can also see in the case of the composite, it really hasn't gone anywhere. Because when we began the month inside the composite, the open was at 42.61. You're trading at 42.37. Right now, so no big shakes there. Now let's see what the weekly chart here shows us inside. And the light blue area, by the way, that's what's called the super bullish move inside of a market. That is strong like bull, only really strong. Let's take a look at a weekly chart out here. This may tell us a little bit of a different picture. So inside the weekly chart, you can see the price relative strength divergence pattern that's out there. That's where price makes a higher high, and it does it on less relative strength. Never what you want to see out there. That's certainly what you don't want to see when you see a bearish reversal signal show up, and that's what we saw take place here. The week ended March the 14th out there. Now, the problem was you didn't get follow-through last week. Last week was a doji candle. Now, that does have some meaning out here. To me, it has more meaning at resistance than it does anywhere else along the ropes here. So inside the composite, you've got the weekly chart. You've got a price relative strength divergent pattern, right? Bear sash candle, no question about it. And then what does it form last week? Well, really two candles, both the shooting star, that is the opposite of the brother out there, of the hammer candle. That is what happens at high. So that says you've got some significant resistance out there. When we get back from this break, we'll continue on with the NASDAQ Composite because we really need to understand the composite out here because it has been the strength on the way up. Will it be the weakness on the way down? Only time will tell. 877-927-6648. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is flat. The S&P is off 6. Composite, which we were talking about before we went to break, it's trading down 38 points right now out of the 4238-ish type range out here. So we were looking at the weekly chart when we went into a break. And in the weekly chart here, let me expand this out a little bit, then we'll go ahead and we'll pull it back. So on the weekly chart, what we're looking for is, number one, you've got a bearish pattern that has presented itself, and it did that the weekend of March 7th. Now, just because it presents itself, that doesn't mean that it's the trade opportunity. You got to wait for some type of reversal signal, which is exactly what took place the weekend of March 14th. You got a nice bearish sash candle. And last week's candle as well was also now you didn't get the follow-through confirmation, meaning a lower close inside of the composite. But what you did get was you got another test of the resistance area, and it set up another reversal candle out there. It set up a shooting star. So clearly, with regard to the candle signals, the signs that are painted by the bulls and bears out there, you've got 2 reversal signals. Just shows you how significant the actual high here from the weekend at March 7th is, because that's the real true resistance area. That high, by the way, is 43.71.71. Any close above 43.71.71, that tells you just how strong a market is to the upside. And that's because of where the bears have been defending themselves. So last week you had a shooting star. It also qualifies as a doji candle, which also has significant meaning at a resistance area. So I'd say you've got a pattern and then three candle signals out here, and even this week's candle signal as we've begun this week, that becomes a bearish engulfing candle. But that isn't really too fair because you got a doji candle from last week. So the key level inside of the NASDAQ composite this week as we come into Friday's session is going to be 4203 and some change out there. So we'll look at it on Friday because a close below that, which, by the way, that's the 13-period exponential moving average. It's a little bit of a modified moving average that I've formed out here. If you take a look at this as I pull the chart now back, the last time that the composite showed a close below that, well, you'd have to go all the way back into the 2012 time frame, December of 2012. So that area has held as a strong support level, and it's right around 4203. We saw one little pierce of it back in June of 2013 out there. But it was such a small pierce. You know, that means if it closes at 4202, that doesn't mean all heck is going to break loose. But if you see something significantly below the 4200 mark out there inside of the strong index, that would be important. It would be an important signal. So that's what we want to watch for. Now, that is on the weekly chart. If we take a look at the daily chart out here inside of the NASDAQ, that is actually this morning here now moving into sell territory. Sell territory would be confirmed today with a close below this Rhodes momentum signal that took place on March 14th. That low is 42.4194 out there. And that would really set up an A to B equals CD to the downside. What does that look like inside of the composite? Let's switch over and let's use my A to B equals CD down tool inside of this charting application. So let's this charting application being the Ensign Windows charting application, a great charting tool out here. If we take a look at this A to B equals CD to the downside, and here the question that we have to pay attention to inside the NASDAQ composite is it setting up a Gartley buy pattern. Let's take a look at this here. So now what we're looking at is the with a close below it. Should it close below the now? Here's the NASDAQ composite as well. And the importance of today's session, right? NASDAQ composite on the daily chart here has been doing what? It's been traveling in a consolidation mode out here. The bottom of the consolidation being the December 18th low. That was the Uncle Ben Bernanke breakout session. That low of 39.79. The top of the consolidation box being the high of January 22nd out there at 42.46. So today you're seeing a gap down, wide-ranging bar. That's bearish. You're seeing a move inside the C to D leg. That says 1-to-1 A to B equals CD is not where the composite wants to stop. The composite wants to make more than the 1-to-1. Is that going to be the 1-to-1.272, the 1-to-1.618? I don't know the answer to that. And in order for that to occur, you're going to need to see the consolidation pattern broken. Now, if we take a look at retracements here, meaning going from the low that came in on February 5th, that was February 5th was testing that December 18th breakout. So we're going to come to a little bit lower low out there, and that's going to be a price point of 39.6819. Oh, I got to grab the actual retracement tool. So we're going to use a retracement tool. We're going to go from that low to this high out here on March the 6th. And what we'll see here is the 0.618 retracement level is 47.22. So I would say if, in fact, we get a close below that B point today, we get a close inside that consolidation area, that not only will the composite make a move to 42.14, I think it'll make a move to somewhere around the 41.34, 41.22-ish type range out there, where it'll confirm, or not confirm, where it'll form a 0.618 Gartley buy pattern. One thing at a time. Facility, one ping. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 34 points. S&P is down 11. NASDAQ is off 57 points out here. Quite a swing in the marketplace. If you take a look at the low of the futures, Dow futures here, for example, we're trading at the session low right now, so about 16,186 or so. And it was up as high as 16,303. So you're looking at, 286? You're looking at about a 120 point move, not 220, 120 point move versus what's reflected here as the Dow being down 39 points out there. So let's go back, and it's the NASDAQ that is clearly pulling the market down out here. If we take a look at as we did take a look at the 120-minute chart here before. Remember, there's 5 outcomes of any type of Gartley sell. Well, here's the 0.786 Gartley sell. It's achieved outcomes outcome number 4 now. That's making the 100% move of a move. That means coming all the way back to this swing point here that was put in at 8 o'clock in the evening on March the 16th. Now, that low was 36.02. You're trading slightly below it right now out at 35.97. The way that prices now come off of the C leg out here, that's the fifth outcome, is that the actual Gartley, in this case here, Gartley sell pattern forms a new A to B equals CD. In this case here, AB equals CD to the downside. The 1-to-1 price projection is 35.84. But if we see it close on the 120-minute time frame, which, by the way, on my chart here, that means noontime. So you got an hour and a half worth of trading here before it determines whether or not the 100% move of a move is the extent of the move out here right now. But any close at 12 noon below 36.02, and that is signaling that it actually wants not just the 1-to-1, not just 35.84, but what it wants is 35.49.75 out here. It wants that lower price, 35.49.75, maybe even 35.05 out there. If we take a look at the retracement off of the low to the high out here, where's the 0.618 retracement of the NQ? This is, again, the 120-minute time frame. Yeah, 35.37. That would be the likely target area for the A to B equals CD to the downside, assuming that it closes below that 100% move. Otherwise, with the price on the 120-minute chart here being in the extreme oversold condition, what you then be watching for is just simply move sideways in order to be able to work that off. And a move sideways, working off an oversold condition, is bearish because it just simply moves sideways, just gearing up some energy for a further move lower. Now, inside of the currency pair, still inside the Euro-Japanese yen, not seeing that level here broken at all, so it's not confirming, at least the currency pair is not confirming what it is that we see inside of the marketplace, not at this moment out here. Let's go check in on the, so as long as we're talking currency pairs, let's go check out the Euro-US dollar. Let's see what it is doing out here. Here's a daily chart. Not a whole lot of movement out here, as you can see. What it did do, though, is it came back inside of the trend line. It broken the trend line from 2008. It did it on March the 6th. Stayed above that level, came back and tested it on March 19th. Test that level, ducked back inside here on the 20th. And really, it looks like it wants to pull back and test the breakout. That is this little wide-ranging bar here that took place on March the 6th, the low of which is 1.3720. The bearish side of the euro, the real bearish side of the euro, will be not just what we've seen here thus far, and not just coming back and testing the channel line. So the black diagonal line is the trend line. The red line is the price channel. That's the long-term price channel going back to 2008. The real bearish thing would be coming back inside, getting below both of those areas, as well as the rising price channel that takes you back into the time frame here of July 26th. That's when you would be saying, okay, boy, this euro really wants lower price out there. Until that happens, it's just trading. So it's got some pretty significant support. It comes in, right around the 136-ish type price level out there. That's what's going on inside of the euro. If we go take a look at what's going on inside the U.S. dollar, Japanese yen out here, right now, it, too, is not moving. Just simply a slight move, lower, but really not much. Pretty much unchanged from where we finished out the trading session on Friday out here. So that is not giving us much of a signal. It, too, just like the euro-yen, has got the potential of a Gartley sell pattern. The euro-yen had a 0.786 Gartley sell. The U.S. dollar Japanese yen has a 0.618 Gartley sell pattern. But at this stage here, you can see that the U.S. dollar Japanese yen has achieved its actually, you can't. It's only achieved its third outcome of any type of Gartley sell, and that's making it to the 0.786 retracement level, which is 101.39 out here. Let's go take a look at the Great British Pound, U.S. dollar. Let's go see what it is doing out here. Great British Pound, U.S. dollar. We're going to take a look at the weekly chart first. As a weekly chart is the one that's got more of a priority pattern. The weekly chart is the one that shows the biggest breakouts on. This is really key here. In my opinion, this week will be a key week for the Great British Pound U.S. dollar. And that is where you can see the black horizontal line going across my screen out here. That is significant support, and you can see that it's trading right into it. That support here was created back in January of 2010. It's held as this is a weekly chart we're looking at. Very strong support old resistance, which is what it was. That's what the black line was up until that breakout session the week of February 14th. Old resistance should become new support, and that's what is testing right now. So even though the daily chart here shows a little bit more of a bearish pattern and breaking the rising price channel, it's why you want to make sure we understand what goes on different time frames. It's why when I was taking a look at the S&P 500, we're taking a look at the composite, and we'll go back and take a look at the other indexes as well. You got to keep things in perspective. And you need to know what's going on up top. You need to know what's going on below on different time frames out there, just to kind of give it all just to properly frame the question with regard to what is the market doing as we speak right now. What I can say inside the ES mini here for the day, 1852. It's trading at 1849 right now, but 1852 is strong support. A close back above 1852, you know what it says? It actually says the back was up against the wall and it held the support, and you could actually expect a move higher in the markets. Whereas a close below that, that would suggest a move lower in the marketplace, and that's where it's trading at right now. So here's the Great Britain. I didn't mean to necessarily, well, I did, it's my show. Sometimes my thoughts go where they go. In any event, so that's it on the Great British Pound. Let's go take a look at gold, silver, light sweet crude out here. Goldilocks right now, trading off about $19, $18.70 to be exact. Trading out at $13 and $1,317. Now, this shows a little bit slightly different trend line than the one that I've got back here. Let me just switch back to this chart. This is the one that I want to use out here in Goldilocks. So gold right now very close to, you can see, if you take a look at both those charts, really gold kind of on the precipice of testing, either having tested or close to testing that rising price channel out here, which will take, and you got a 13.11, even with gold trading back $18 right now, until it breaks below 13.11, not 13.10. It really needs to break below that. It's actually still pretty. Look, gold is bullish, looking all the way down to 12.62. That's just your 0.618 retracement level. But we'll see if it can actually get down there. In the case of silver here today having completed a 0.618 Gartley buy pattern. No reversal signal here just yet, but that could come today, could come tomorrow, could never come at all. If it doesn't come at all, that means the price inside of silver would take it down to about $19.46. So this $20.04 area is muy importante for silver to hold, but it is not a buy, not just yet. Not unless you're trying to really time the market, and I don't think that you need to do that. We take a look at light sweet crude out here. If you didn't catch us during the first hour, Stevie's son here set up a potential trade in light sweet crude to the downside, thinking that while the G7 is gathering today, that their best weapon is going to be economic weapons. So what economic weapons could that group, from Canada, from the UK, what group is it from Germany? What is it that they could actually, put together out there that would put some pressure on Russia? And do they want to hurt the Russian people as well? And I think perhaps the biggest one out there is going to be in the energy market, right? Because that is a tax. You got to admit that when energy prices go up, when you pay more at the pump, it's an immediate tax collection, isn't it? And so that is the one that I think is the area where, if they can come together as a tribe, as a group out there, and so therefore my suspicion is, and all I can do is try to put myself in their place out here. If you want to have a war, but not boots on the grounds, and you hit somebody in their pocketbook, right? And so there has to be a way. That, in my opinion, that's what they're all getting together on. How that plays out, whether it's releasing from our strategic reserves, who knows what it is that the deal is. But the reason why I'm suggesting that is because what's really cool about light sweet crude is the mere fact that there's this potential for an A to B, a strong A to B equals CD down, which would take it to about 90.83. And the reality was, what I was showing is that if you take a look at the weekly chart, that actually would break a huge long-term rising price channel out there. And I would say that this would be a battle that would go on longer than shorter out there, right? And that is something I can visualize. I can see that taking place out here. So I don't know if that's going to take place. This is all Stevie San speculation, but why not speculate on what might happen out there? Maybe you've got a different idea on what the G7 would be talking about out there. They're certainly not trying to harm each other's currency. Just black gold Texas tea, just that currency out there. In any event, let's go take a look at another currency that they could be talking about here in that marketplace, and that would be liquid natural gas. Absolutely. So that would be right now we're taking a look at natural gas, and that is moving lower out here. The 1-to-1 A to B equals CD to the downside takes natural gas down about $3.96 out here. Big old key reversal session, bearish engulfing that formed out here at the 8 point of the A to B equals CD to the downside. That was on February 24th out there. So we'll see. If we take a look at world markets out here, let's go see what actually took place out there. Right now you've got the DAX is trading off 120 points. So the FTSE here, let's take a look at the FTSE here first. The FTSE, it tried to break out. It's traveling in at least a 400-point consolidation level. The FTSE suggests that it wants to get down. It'll find support, or should find support, down around 64.30. It's trading at 65.23 as we speak here right now, which is the 0.786 retracement area of the move from the lows on February 4th to the high that was put in on February 25th out there. Let's go see what trading to the downside in the DAX, 117 points, means out there. Is there any kind of significance there? Here's the DAX. The DAX here had made a close to the 0.618 retracement. So this could be forming an A to B equals CD to the downside. Let's take a look, at the DAX. So the DAX has already completed one A to B equals CD. Let's go paint that in here. The 8 point on this was up here on January 21st. That high inside the DAX, 97.94. Little doji low out here on February 4th. Bounces higher up into a high on February 26th. The 1-to-1 A to B equals CD takes you to 89.96. It got down there, closed just above that. So the question is this now the second A to B equals CD? Because you got a reversal signal today. You have a bearish engulfing candle at thus far has engulfed only one trading session. However, today it closed below 92.15.70 would engulf 3 trading sessions out there. So it is possible the second A to B equals CD to the downside would be forming inside of the DAX. Where would that take it to? Well, price-wise, your 1-to-1 would take you into the 87.51 level. And as you can see, that black diagonal line, that is a rising price channel. That would actually break through that area. We have not seen a break of that area since June of 2012 out there. So that should actually be strong support. And that is inside of the DAX. Let's go see what went on over in Asia last night out here. Inside Asia, you talk about strong support. Well, inside the Hang Seng here, this is a monthly chart out here. And if you come off of the 2009 lows out here, you'll see that the bottom, that blue diagonal line out here, that is still acting as strong support. Price is really, it closed right on there. So we got obviously time left in the month out here. 21,846 is where it closed. Right around that level is the bottom of that rising price channel. We will see if that, in fact, can hold. But that is strong support, no question about it. And that would be very bearish if, in fact, you saw it close below that level. If we take a look at the Shanghai out here, Shanghai, let's take a look at this. Let's pull this back. Let's take a look at its patterns out here. Let's get rid of what we've got out there. Let's get rid of this retracement here for a moment. Let's get rid of that as well, counting it down. Let's take that. Okay, delete. So what do we have here inside of the Shanghai? The Shanghai going ahead and making that fourth outcome of any Gartley sell, which is what it created here. It formed almost a 0.786 Gartley sell in the trading session of February 20th out here. Remember, 5 potential outcomes, the fourth one being a 100% move of a move. That was getting back into the swing point of January 21st. You can see that level has held out there. So there is the fourth outcome. That level is held. We saw a wide-ranging bar here. That was on Friday's session inside of the Shanghai. That's pretty powerful. Now what we ought to see at a minimum is a retracement. And the retracement here, you can see it came into that 0.382 retracement with what? Wide-ranging bar. What's a wide-ranging bar tell us? That it's not done. It's not done with that move. So inside of the Shanghai, it says it wants to get up to the 21.98 level. It closed last night at 21.63. That's its next level on its floor higher. Right now, we've got the Dow is off 24 points. S&P off an even 10, trading out at 18.56. NASDAQ Composite down 61 points. That is the weak link in the chain. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Release the hounds. That's what's going on inside the NASDAQ Composite, leading the charge here. Well, the Russell 2000 as well. We'll go take a look at the ETFs as we wind out the trading session. But leading the charge on the way down, Priceline, Priceline.com. If you're watching us on Tiger TV, it created a nice little price relative strength divergent pattern as it made its high. That was on March the 6th. Formed a little bearish engulfing candle that trading session. Very next trading session, it had some follow through to the downside. These little green signals here on my chart, those those are the Rhodes momentum indicators, tell you nothing but selling pressure is in place, whereas the red signals tell you nothing but buying pressure is in place. If we take a look at where Priceline is likely to head to, it's moving through a B point of an A to B equals C to the downside. Doing it with volume, the B point being March 14th, the low being 1267.05, 866,000 shares that trading session, already done 469, only an hour and a half in trading. Hard to believe that it won't have the volume to have busted through there. So where's that going to take Priceline? Well, it's not going to do the 1-to-1, which is 1205. It likely will get to 1174. More likely, I'd have to say the 1135 target. That little gap up from February 7th out there. So that's where we saw its last sign, or a recent sign of strength on the move down out here. That will take you to about the 1157 to the 1145-ish range out there. Moving down, though, into that area with more than 1.4 million shares says that there's trouble in paradise for Priceline out there. Let's go in and take a look at the ETFs here. Try to do that over the course of the next 2 minutes, so I'll do a quick review. Let's take a look at the IWM here. The IWM, as you know, we had that big, huge sign of strength out here. That was on March the 4th. So right now you've got the IWM trading into that breakout session. 50 million shares on March the 3rd. So far today, it's done 21 million shares. So it's pulling back with volume. Of course, the real benchmark is 112 million shares. The IWM still just really trading in a sideways consolidation. We take a look at what that looks like. Here is basically your sideways consolidation inside of the IWM. A break below the price level of 116.38 then might start to get more serious, because remember, when you break a consolidation, your move is equal to or greater than the consolidation move out there. So that's how I'd be taking a look at the IWM. If we take a look at the Qs have broken through that consolidation box. You can see that's the yellow shaded area on my screen. So what does that mean? Well, because the Qs have been consolidating out here, that says the measured move would take the Qs down to about the 85-70-ish type level. If we take a look at just simply retracements here from low to high, meaning coming from February 5th up to the high that was put in on March the 7th, the 0.618 area gets you to 85.37, just below the measured move out there. I would suspect that that's where the Qs want to trade down into. If we take a look at the diamonds out here, diamonds have not done anything but trade sideways. So although they've been ahead about a 120-point move, if you take a look at the futures market, if we take a look at the Dow diamonds, so far this morning down with 1.9 million shares, but it too is really just kind of consolidating up here at the highs. No damage yet has been inflicted inside of the DIA. Inside of the SPY, really the same pattern out here. Nothing more than consolidation action. That's what we've got going on inside the market right now. What would break that? That would see the SPYs closing below 184.44, and that would set up a measured, or it could set up a measured move inside of the SPY to take you down into the range out here of about 180-ish. 180-ish, I believe, is going to be your 0.618 retracement coming off of the low to the high that was put in on Friday. The actual 0.618 would be 179.56. Ooh. That was a run-through for each of the ETFs for you. Stay tuned, folks. Our man Basil Chapman is up next. Following Basil, we've got, we might have Basil again, I'm not sure, for the Larry Pesavento show out there. And then we got Daryl Martin, David White, the Tom O'Brien show from 4 to 6. Have a safe trading session. And, folks, thanks so much. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.